Gold price reverses ahead of September low with U.S. election on tap. Price of gold bounces back from a fresh monthly low, 1,860 on the back of U.S. dollar weakness. And bullion may continue to show an inverse relationship with the reserve currency as key market themes remain in place. The price of gold may trade within a defined range ahead of the U.S. presidential election as it reverses ahead of the September low, 1,849. But swings in investor confidence may influence the precious metal in November as ongoing negotiations for another fiscal stimulus program puts pressure on the Federal Reserve to further support the U.S. economy. How will markets react to the 2020 U.S. presidential election? U.S. elections are coming down to the wire with less than 1 week to go until November 3rd. A mixed composition of Congress could be the worst outcome for financial markets, while full Democratic or Republican control of Washington, D.C. could prove positive regardless of specific policy outcomes. The coronavirus pandemic makes the 2020 election cycle and the reaction in financial markets unlike any other election cycle in American history. U.S. election season has dawned upon global financial markets, and the U.S. presidential race is coming down to the wire. Amid a haphazard federal response to the coronavirus pandemic that has culminated in U.S. President Donald Trump himself contracting COVID-19. Challenger Joe Biden finds himself up double digits in the latest polls conducted through October 13th. EUR-USD latest. Euro area growth exceeds forecast. Euro looks past data. Eurozone Q3 GDP printed at the 12.7%, exceeding expectations of 9.4%. However, remains 4.3% below 2019 levels last year. The higher-than-expected figure had come as little surprise, with ECB President Lagarde stating as much in yesterday's press conference. For that reason, as well as the fact that the momentum in growth is expected to have slowed dramatically in Q4 amid renewed lockdown measures, the euro had been unmoved following the release. The bigger focus for the euro in the short term being placed on the Q4 growth outlook alongside next week's U.S. election. South African Rand outlook. Global sentiment continues to govern ZAR. This week has been a roller coaster for the USD-ZAR pair as a plethora of fundamental factors were revealed. From a South African perspective, there has been a postponement of unemployment data, marginally lower than expected inflation figures of September YOY, and the medium-term budget policy statement MTBPS by Finance Minister Tito Mboweni. The much talked about U.S. stimulus package has been abandoned in terms of a pre-election release, while upcoming U.S. elections remains at the forefront of the global political landscape. Positive U.S. Q3 GDP QOQ numbers yesterday reflected in a risk-seeking mood, with the Rand outshining its emerging market EM counterparts.